Happy Monday. We got a lot to talk about. Let me just jump right in. Hey everybody, this is Pookie's Revenge, back with another 5-year, $500 Rags to Riches episode. And I got a couple things I want to talk about today. So first, let's get into the portfolio review. So let me just get my face out of the way really quick. Okay, so basically we replaced all the speculative stuff in this portfolio. So that's all gone now as we transition into the next phase, which is going to be the covered calls and some of the more aggressive passive income strategies. So I'm not going to be doing a lot of day trading anymore. It's just going to be like passive and kind of self-working at this point. So doing it a little bit early due to some external circumstances. I just want to get this ball rolling, and you guys can kind of see that the process works by now. I mean, we started this in September, and the overall concept of just adding money in consistently and then not losing more than you're putting in causes the portfolio to grow, and then you can build in passive income to speed that up, and then speculation to speed that up even, or you can not be so successful in that and it's still okay, right? So that's the overall concept, and that's all we've done so far. So JAPQ is up, obviously Johnson & Johnson is up. Still waiting for them to take my shares and pay me that $1.65 per share on this one. Who knows how long that might take. Schwab is up, O is up, Maine is up. So basically all the ones that I'm committing to long term are up, except for Ladder, which is a growth position, which is just kind of taking its sweet time, and that's okay, right? This is a longer term investment. I'm not too worried about a little bit of noise. And then the ones that are down are the more aggressive high yield dividend ones. So like GLIP, for example, it's still going back up, but it's just taking time. And Tesla, of course, is pushing back up, but it's in this channel and I'm okay with it, right? This is a high yield, high risk ETF, so I'm okay with the share price drawing down. I don't really care too much about that. And they've done their reverse split. So, I'm sorry, they've done their split. So basically all they've done is taken the number of shares that you own and cut that in half. And then they've doubled the price value of each of those shares, as well as the dividend payout, since that's based on market price. So if anyone wasn't already aware of that, that's all that's happening. It doesn't affect anything crazy. And as you can see, there hasn't been a ton of share price sell-off, which is what most people were concerned about. So pretty easy. Pretty easy. I'm going to keep accumulating them as well as all the other positions here over time, and I still plan to cap this one. Okay, so I'm not going to be capping it at 50. It's still going to cap at 100, but the shares will be a little more expensive, so I'll have to slow down on buying them. But I'm still going to do it. All right, so that's the portfolio in a nutshell, minus this NEO leap, which again is good until January of next year, so I plan to sell this sometime in the summer. So I'm not too worried about this little 30% drawdown. This is perfectly normal. And the price really doesn't have to go up very far to get back to positive territory, and that is a-okay with me. So I'm just building it down. I'm DCAing down. We've recently found a support here for this nice little double bottom, and if we break over 630, for example, we should shoot right back up. So not too worried about that. That's the theory. Whether or not that happens is another story, but we'll see what it does, right? Either way, you can see, again, the overall concept here is we're sustaining, right? We're sustaining and growing. That's the idea. All right, so let me just pull up this other account over here, and then we can kind of get into that side of things. So over the weekend, I held a covered call. So again, from the last video, covered call is just a strategy in which you buy 100 shares of something, and then you sell a call against it. And what you're doing by doing that is selling your right to buy shares to someone else. So essentially, you're selling them the right to buy your shares, which means that they can buy your shares, which means you sell them your shares if it gets assigned, okay? So let me just collapse this down, and we can see what happened since I sold the contract. So here's my 100 shares, right? I paid, I think it was like $5.50 something. And then I sold one call against that. And you can see here that the value of this contract has gone up, okay? And personally, I don't care because I sold the contract to keep the premium no matter what. The buying price of this contract only matters if I want to keep my shares. I don't. I want to just sell them in this case because I already have shares of NEO, or I have the Leap over there on the other account. So I don't really care too much about 100 shares over here. So I'm okay just selling them at $6, and that's if the price pushes up and sustains. So I'm covered either way. If the price goes down, I keep the value of the contract that I collected, all right, and my shares. If the price goes up, I simply sell them at $6 and I keep what I already collected for the contract. So that's the beauty of this strategy. is the only time I really have to make a decision is if I want to buy the contract back and keep my shares. But in this case, I don't. Okay, so hopefully that makes sense. If it doesn't, I can go into a little more detail. But this is a working example. And this Cala, of course, is just left over. I'm already net profitable on this over time, but they delisted, so I couldn't offload these shares. And I don't want to freeze the portfolio for 2 weeks while I transfer them. So they're just kind of hanging out, so you can ignore that. This is from when the account was bigger in this margin account. So yeah, that's the idea. I bought 100 shares. I sold the contract against it. You can see that the value of the contract in my position is red, but the value of the contract itself has actually gone up. Remember, because it's a call. As the price goes up, the value of that call is going to increase. So it's going to look red for me, but I don't care because I'm not buying this contract back. So I don't have to pay $57 for the contract that I collected 48 for, unless I want to keep my shares, and I don't. Okay, so with that said, I got a lot more to get through. So since we're branching into covered calls, I want to demonstrate this process, and part of this is going to be kind of fast forwarding a little bit, and I don't want anyone to feel like I'm, deceiving and all that good stuff. I'm just adding more money into the portfolio to kind of skip ahead in the future, and I do understand that that impacts the promise of 5 years, 6 figures at a consistent rate. And if I keep going at this rate, it will happen. But I also want to make sure that I get enough content early on for people that don't have smaller accounts, so that you guys can see how the strategy and the concepts apply as the portfolio grows, without having to have you guys sit through another 3 to 6 months of me making contributions and doing covered calls, right? So all we're doing is just skipping ahead. And again, that will affect the promise of bringing it to 6 figures. But if you just work through the math, you can see it's the same end result anyway. I'm just doing it a little bit faster. So pretty soon I will be adding about 20K into this account. And I understand that's not something that everyone has. And that's perfectly fine if you don't. I don't want anyone to feel like they have to keep up. The idea here is that this strategy works. The portfolio will continue to grow to 20K anyway. I'm just skipping ahead a little bit just to show you guys more focus in this one particular strategy. Okay. So with that said, it might not be 20K, it might be like 10 or 15, but either way, I'm going to add some more money into this portfolio. That will put me up in the higher realm where I originally intended to focus on the covered calls and stuff. But I don't want anyone to be caught off guard one day if they see it's like $2,800 one day, and then it's like 23,000, So I just want to be transparent about that up front. And I apologize if anyone feels like this puts it out of reach for them, but for your own journey, I don't want you to feel like you have to keep up. Just keep following your plan, and eventually you too should get to 20K, as long as, again, you're not putting it right back into speculation and losing more than you're putting in. Okay, so that's all we're doing. We're just looking into the future. Same concept, same strategies, all that good stuff. The other piece that I wanted to talk about is that I will be doing, I'll be sharing a workout progress journey as well, because I know we don't want like extra stuff in the mix, but if you're a trader, or if you work a 9 to 5 where you're sitting down living a sedentary lifestyle, it's not healthy. So part of trading is risk management, and risk management with your health is the number one area where you can focus that risk management. So obviously if there's no you, there's no your portfolio, right? And it's got a lot of physiological effects, such as our ability to help us make better decisions, be more sharp overall. It helps correct our posture as we're sitting so we can breathe more efficiently. Our brain gets more oxygen, all that good stuff. Our hydration means more. We can sleep better at night in most cases. Now, this isn't medical advice. And, obviously if you have like a sleep disorder, I don't mean this to be offensive, because I know not everyone can just sleep at night or just power through it, That's a not a healthy mindset for people to just say things like that. So I want to preface that with, I'm just considering myself here. But if you do have any medical conditions, or if you're concerned, I would recommend, consult your physician. Just as all the other disclaimers out there say, I can't give you medical advice. I can't give you financial advice. I'm just giving you some education and sharing insight into what I do. I will be sharing my workout plan. I'm not going to be streaming the workouts or any of that stuff. I'm not trying to be a fitness guru. I just want to share that, this is an important part of everybody's trading plan, or should be. Even if it's just walking, 30 minutes a day, that's a good start. Everyone should be doing that, in my opinion, if possible, obviously. staying hydrated, making sure you're trying to get good sleep, good diet, all that good stuff, just because it's better for your brain and your cardiovascular health, which just plateaus and falls off as we get older. So, um, so here is the overall strategy for that, and I'll share this up front, and I'll make I can make a flowchart for this as well. But this is my plan, right? Just to briefly walk you guys through this. I'm going to be going to Planet Fitness. I'm not going to go to like like Event Fitness or anything that's like, any of the more aggressive gyms. I just don't care, right? If you can't get to baseline health at Planet Fitness, none of those other gyms are going to help you. And it's probably going to be toxic for your mindset. So I just use Planet Fitness because it's cheap. I don't really need to ego lift. I don't need to go to anywhere like different. It's like accessible everywhere, and it's a cheap subscription. So more than enough for me. I usually work out at home anyway, so I don't subscribe to the gym wars. But number one, hydration. You want to hydrate, or I'm going to hydrate 3 to 4 hours before I go to the gym. I'm going to be going at 9 o'clock Eastern every night, Monday through Friday. And then, I'm sorry, 8 o'clock on Friday, and then Saturday I'll go at some point during the evening probably, or work out at home. But I'll get into the workout here in a minute. Every workout will have a 15-minute walk beforehand, just to get the blood pumping, get the legs moving. And that 15-minute walk will turn into a 15-minute jog, right? The idea is you cover more distance as you're jogging. It's just better for your cardiovascular health. I know a lot of people just want to lift and they just want to do like calisthenic stuff, but you have to breathe. That deep breathing is good for your cardiopulmonary system. You can't just lift, all right? You do get a good pump off it, and your blood circulates, but that lung capacity also matters. So does your posture. And then I'm going to do the Army PRT workout. That is just a quick series of basic calisthenic exercises that just focus the groups and just kind of gets everything fired up. It's not super intensive. There's no weights. It's just like squats, lunges, push-ups, like scissor kicks, things like that. It's nothing crazy. And then at that point, I'll be fully warmed up, and then I will be doing a push-pull leg split twice a week with a rest day. So what that means is that the first day of the week, I'm going to be doing push exercises. That's going to be flies, pushes, triceps, anything that involves pushing, like shoulders, triceps, and chest mainly. Okay. The next day, I'm going to let that first group rest, and then I'm going to work on pull exercises, like, doing curls, back exercises, things like that. All right. And then the third day, and I'll do legs every day. Legs and abs you can work out every day, or I can, just the way our bodies are designed. But I really want to focus more on strength for the legs on the third day. And then by that time, the DOMS, the delayed onset muscle soreness, should wear off on the first group, right? Just like we rotate settled cache, we can rotate our muscle groups. And then I'll just do more push exercises on the fourth day. And then the fifth day, I'll do pull exercises. And then the sixth day, I'll do legs again. And then the seventh day, this is the important one, you got to rest, okay? You have to rest. You can't work out every single day and expect to not have an elevated injury of risk level, okay? Then after all the workout stuff, all the strength stuff, then I'm going to be doing a 15-minute jog, 15-minute walk cool down, okay? And then I go home and I try to drive my standard with jellyfish legs, and that'll be fun. The alternative to this is I could do an every other day full body compound workout, which I don't prefer personally. I'd rather just do the push-pull leg split to keep my gym visits relatively short, since it's late at night and I don't want to get killed by the wife. So with that said, that's the plan. I'll share the specifics of the like this PRT workup, for example, just because not everyone knows what that is, and I'll put resources in the breakdowns channel. And every day, I plan to put my exercises that I do for that day in the breakdowns channel. And that's going to include the exercise, the number of reps, and the weight, including if I do drop sets, I'll include that. And if you don't know what all that is, that's okay. I'll walk you guys through it all. Not everyone has to do like an intensive workout, and this isn't super intensive. It's just a little bit above beginner. So if all you can do or all you want to do is just walk 30 minutes a day, that's great. I applaud that effort, and that's really a good place to start. So if you're not ready to do like strength training, or if you don't want to do it, or you don't care about the exercise stuff at all, you can always just hide that channel, and I'll try to keep these episodes to a minimum, and I'll just try to incorporate it as part of my my cooldown, or my reviews. I'm sorry, I'm rambling a little bit. So this is another 15-minute video, so I'm going to cut it off pretty soon. But just like managing a portfolio, we have to manage our body. So part of good portfolio health is diversification, and that's all I'm doing here. I'm just diversifying my my efforts and my yeah, we'll just leave it at that. Just making sure that I care for myself the same way as I care for money. My money, anyway. That way I'll be around for a while and can keep trading with you guys. So I will see you guys later. Thank you all for watching, and I appreciate it. Have a good day.